Did you see the article I sent you this morning? UK imposes windfall tax on energy firms to fund $15 billion relief for households.
I did. Yeah.
Don't think Trudeau didn't see that.
Yeah, no kidding.
Probably talking about it as we speak. Okay, it's May. We're getting almost into June. Seasonally, it's a weak time. People are starting to go outside and forget about their socks and whatnot. Having said that, in the last 10 days, the TSX Venture has averaged 27 million shares traded. In the last 2 trading days, the exchange has failed to register over 20 million shares traded. We're talking about 15 million shares traded in a day. Never before have we seen such low volumes. Never before.
Yeah, I think this summer is going to be dubbed the summer of no bid. It's wild. These are unprecedented times.
I liken it a bit to the real estate market in Canada right now. Okay, yeah. You're seeing transactions come off huge, 27% decline in activity, Greater Toronto. Yeah. It's not that the venture is in free fall. Yes, it's down 30, 40% or whatever from the high. It's just that there's no interest. It's almost like investors have no interest in selling or buying at these levels. And until something exciting happens or the market starts going up, they're just going to forget it exists.
So prior to the pandemic, the average American had about $400 in their savings account. Okay. And I think this is actually more significant in Canada. But so they have $400 in savings in their bank account prior to the pandemic. Government stimulus comes in. They're writing checks and giving handouts and trying to stabilize the economy during the pandemic. We can argue if that was right or wrong, but the point is savings accounts went from $400 pre-pandemic to about $2,000 about 6 months ago, 6 months ago, because of the checks and the stimulus that was provided by the government. So from $400 to $2,000, that's expected to deteriorate back down to the $400 level within 3 months. So basically what we saw was an artificial surge in demand for various types of products. And we're kind of recalibrating, the economy's recalibrating back to normal levels. However, like most things, people probably overspent some of their extra dough, took on more credit, and here we are. No liquidity in, let's call it discretionary items, which would include micro and small cap stocks that trade on the TSX Venture. So the West came in and said, we're basically going to weaponize SWIFT and make it so it's very hard to transact for Russian energy companies and oligarchs, basically the whole country. And it's going to be hard for other countries to transact with them. So what did that do, essentially? Well, Russia had to find a workaround, and so did the countries that deal with Russia because they're dependent on their natural resources, primarily energy. Now, they're not doing it in U.S. dollars anymore. I can pretty much guarantee that.
Yeah, no, they're paying for it in rubles.
Rubles, exactly. Yeah. So what does that do to the U.S. dollar's long-term viability? I don't know, but it's not good because less global trade is happening in USD now.
All of this comes back to Canada being in an extremely fortunate position. Germany is firing up its coal-powered plants, burning they were laughing, at Trump in 2018 and for being dependent on Russia as if, nothing would ever happen. Right. And now they're firing up their coal plants. Meanwhile, as you spoke to Canada's natural gas prowess and building, an export facility on the East Coast, everywhere you look, from fertilizer, to oil and gas, just literally everything Canada has. So, Russia is going to disrupt the commodity markets for years to come. Yeah. And I think Canada is going to be the biggest benefactor worldwide.
Totally. And this is one of the kind of the aspects to create certainty again. So the issue right now is when you're an investor and you're looking for opportunity, let's say, how do you apply discounted cash flow value on any company, whether they're big or micro caps like what we look at or small caps? How do you apply a discounted cash flow value on these companies when there's so much uncertainty. And a lot of this uncertainty comes from, the price of food, grain, inflation, interest rates, blah, 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 energy crisis, war, all this stuff. So the more pro kind of commodity policies we put in place to get these critical things like energy, agricultural products, even metals to a degree, to our allies, the more policies we put in place to do that, the more certainty will come back to the market. And then we can start to see valuations creep up again.
And there has been some incredible wealth creation in specific sectors. I always kind of come back to lithium and some of the names in the lithium space in Canada. I was looking at some of the biggest market cap issuers on the venture this morning. Look at deals like Sigma Lithium, SGML, trading at just under $24. The stock
and that's on the venture?
That's on the venture.
They haven't gone to the big board yet?
Haven't gone to the big board. 2.4 billion market cap. This is a company that traded for $2.50 in early 21.
Yeah.
So you're seeing, 10x, billions of dollars of, wealth creation happening on the exchange still, albeit, in very niche sectors.
Yeah.
The broader markets, the broader mining markets, even, from gold stocks, the energy, lithium, there's been a few little standouts here and there. A couple graphite stocks have done okay, but it's been very niche. The success has been very concentrated in a few hands.
So Ray Dalio, obviously everybody knows him. One of the most successful money managers to ever live. He gave a pretty cool breakdown on what it takes to be a superpower. And I just thought this was really neat because I think we're hitting in our lifetime, we're going to see it, is kind of that, neck and neck or China overtakes US as the global superpower. I hope it doesn't happen, but it certainly seems it's going to happen. So he has his 8 points of what it takes to be a superpower. Number 1, education. Number 2, trade. Number 3, innovation. 4, military. 5, competitiveness. 6, financial center. So do you control the financial center of the world? 7, output. And 8, reserve status. So world reserve currency, which, as we spoke about earlier, with Russia going around kind of the sanctions and trading in its own currency can create a problem. So if you look at that, you take number 1, education. You got to give it to China, in my view. Number 2, trade. We know it's China. Surplus after surplus. 3, innovation. I think the U.S. still has that.
For sure.
4, military. I think the U.S. still has that.
Yeah.
5, competitiveness. I think that's a question mark. Yeah. 6, financial center. That goes to the U.S., New York. 7, output. So productivity. It's tough, but I think it can be debated. I think it leans China if you just take output, maybe not individual productivity. And then 8, reserve status, which is the U.S. But if you look at those numbers, you have
a tie.
You basically have a tie. You have a 4-3 in favor of the U.S. with a question mark on competitiveness that could go to China. All right, I think that about wraps it up, Alex. Everybody at home watching, don't forget to like and subscribe.